From massive Dogecoin price prediction to some very important data and updates, there is a lot to talk about in this video, so let's see what exactly is happening. First of all, we are now seeing that crypto prices have been dropping during the last couple of days. While this plunge has been led by Bitcoin, altcoins also dropped sharply during this time. So due to this sluggish movement of cryptos, the total crypto market cap has also fallen as the overall sentiment is turning bearish. Meanwhile, the crypto fear and greed index has also fallen from 33 to 22 points over the last 24 hours. So what we are seeing is that the extreme fear sentiment has returned to the market, and investors have once again begun to remain on the sidelines. One of the reasons why we are now seeing this sluggish momentum in the crypto market is that Russia is now showing more and more aggression while invading Ukraine. Just recently, Russia aggressively shelled and seized a major nuclear power plant in Ukraine, showing disregard for a potential meltdown of the plant. As a result, stock markets fell sharply with the S&P 500 declining about 0.8% and the Nasdaq and Dow dropping about 1.9% and 1%, respectively. And since the crypto market is now mimicking the movements of traditional markets, it has also fallen amid this drop in stock prices. Now, if we come to Dogecoin, we are seeing that it has fallen below the 13 cents level after showing some support at this level earlier this week. We can see here that it is now trading below its important moving averages, and its MACD level has also turned bullish. Meanwhile, the daily RSI value of Doge has continued to be below the neutral 50 level to indicate a bearish trend in the short term. However, a closer look at some important technical indicators is suggesting signs of weakening bearish momentum from here. We can see here that the awesome oscillator of Doge has formed a higher low even as the price made a lower low. So as I said, this could be a sign of weakening bearish momentum and a possible reversal around the corner. Such a reversal to the upside could see a test first at the ceiling around 14 cents, and then, should momentum provide enough cash inflow, we can see a test around the 15 cents. Moreover, in the event of a big catalyst event, we can expect more upside towards 16 cents and the start of a longer-term uptrend towards 19 cents. Talking about a catalyst event, we recently say that the My Doge wallet has officially been released. So this can turn out to be a major catalyst for Doge, since it is expected that the My Doge wallet will once again reignite Dogecoin enthusiasts' interest in it. And I truly believe that the adoption rate of Doge is going to spike this year, since My Doge wallet is going to make it a lot easier for businesses to accept Doge payments. Along with that, the Dogecoin Foundation has recently announced that it has secured trademark protection under the EU Intellectual Property Registration for Dogecoin. It is an important update for Doge, since this trademark protection is going to stop the bad attempts made in the name of Doge. So the point is that while Dogecoin is still moving sideways, there are some bullish technical indicators for it along with some positive updates. So I'm still optimistic about it, and I still believe that Doge is going to rebound from here in the coming weeks, while its long-term outlook is a lot more bullish. In any case, I'd like to remind you that this isn't financial advice, and I'm not a financial advisor. So I'd suggest that you do proper research before investing anything into crypto. And with that being said, let's come to Bitcoin's price for a minute. So Bitcoin has been facing another price drop during the last couple of days, and we are now seeing that it has dropped below the 40K price level. And with this plunge, it is now trading below its crucial moving averages, showing us that the overall trend is currently bearish. So as I explained before, fears over the security of Ukraine's nuclear infrastructure drove traditional markets lower in the last 24 hours. So due to Bitcoin's high correlation with stocks, the price of Bitcoin has also fallen amid this drop in the traditional markets. Moreover, despite demonstrating some correlation with gold in the previous week, Bitcoin's price drop is now indicating that this correlation is not absolute. This is because gold's price has been rising while Bitcoin is plunging. So it is unclear whether Bitcoin will trade alongside safe haven assets as traders assess the impact of usual crypto volatility on market movements. And as per crypto analyst Michael van de Poppe, Bitcoin is correcting because tensions around Ukraine are increasing, and fear is increasing too as gold is rushing upwards. He is saying that we are now seeing overall shaky markets, and altcoins are dropping too. However, he also believes that we might be seeing a bounce, and if we do, he is looking at the 43.1 to 43.5K range as a potential resistance point. Meanwhile, analyst Pintoshi has warned that the macro outlook looked bleak thanks to a combination of commodity inflation, reduced ability of central banks to tame it, and the existing damage done by responses to the coronavirus over the past 2 years. He has stated that we can already see other markets starting to show massive cracks in the foundation. Hong Kong has erased 100% of the post-COVID gains, and it appears European markets are next. However, analyst BTC Fuel is looking bullish on Bitcoin, and he is saying that it looks like Bitcoin is now setting up a reversal structure. He is saying that after running into the 100-day moving average, there are 2 possible scenarios for Bitcoin. And we can see here on this chart that these include either staying between the MA and following the blue scenario, or falling below the MA and following the orange scenario. Similarly, crypto analyst Nicholas Merton is also looking bullish on Bitcoin. So Merton is saying that the Mayer multiple model is indicating that Bitcoin is oversold and ready for a sizable rally. He believes that the Mayer multiple is currently strong, suggesting that Bitcoin is due for upward price action. Moreover, Merton is saying that throughout the recent history of Bitcoin, the Mayer multiple has acted as a good indicator for identifying the bottom of a bearish trend for Bitcoin. And currently, it is very similar to what we saw back in July of 2021 right before prices started to spring higher. So what it means is that Bitcoin is going to repeat history, and it is now getting ready to move to the upside. And now, despite this fall in its price, some bullish things are still happening for Bitcoin. For example, retail investors seem to be returning on the Bitcoin landscape, especially small addresses. We are now seeing that there is a gradual growth of Bitcoin wallets containing 0.1 or more Bitcoin. Moreover, addresses holding at least 1 Bitcoin have also been on the rise. And more importantly, the increase in these addresses has been more aggressive as they have reached a 10-month high. In fact, there is more confirmation of this rising retail investment in Bitcoin. We can see here that the number of addresses holding 1K or more Bitcoin has just reached an 11-month high of about 2K. Similarly, the number of addresses holding 1 or more Bitcoins has also reached a 10-month high of about 820K. So what it means is that Bitcoin has been seeing a huge buying spree in recent days. The most important thing is that most retail investors are now getting into the Bitcoin market. We know that they were sitting on the sidelines during January and February, but it appears that they are now realizing this opportunity to buy Bitcoin on the dips. So history suggests that whenever Bitcoin experiences such a massive accumulation zone, its price breaks out to the top. So I think that despite its current price movement, Bitcoin's overall outlook is still not bearish, and I believe that it is going to move to the upside in the near future. And now, let's come to Ethereum for a minute. So while the price of Ethereum has been consolidating, experienced trader Peter Brandt has shared a bearish warning about Ethereum. So he has shared this chart, and it is showing a symmetrical triangle in the making for Ethereum. This is a bearish chart formation with 2 converging trend lines that are moving closer to each other as the market keeps making a series of higher lows and lower highs. We can also see here that Peter Brandt is addressing millennial traders and urging them to remind him of the bearish call 3 years from now. So this is indeed a massive warning for Ethereum, and it appears that Peter Brandt is pretty serious about it. However, the good thing for Ethereum and Bitcoin holders is that Bloomberg Intelligence is saying that Russia's invasion of Ukraine could aid in driving up the prices of Bitcoin and Ethereum. Bloomberg report says that the energy price hikes caused by the current geopolitical crisis in Eastern Europe could help Bitcoin evolve as a new asset class. It is stating that supply, demand, adoption, and human ingenuity point to Bitcoin regaining the upper hand versus crude oil in 2022. The report also states that war in Ukraine may enhance the value of Bitcoin and Ethereum and the proliferation of crypto dollars. These cryptos are showing divergent strength versus equities, facing greater risks to recession and spiking energy prices. Moreover, the Russia-Ukraine conflict could boost dollar dominance via crypto tokens. And now coming back to Dogecoin, we are now seeing that despite its current sluggish movement, some technical indicators are still suggesting a surge for it. Moreover, another thing is that almost half of Doge holders are currently in profit, even when its price is trading on the downside. Meanwhile, the number of Doge holders is also increasing gradually. So seeing all these things, I still believe that Doge is going to gain some momentum in the coming weeks. In any case, where do you think we are headed from here? Do you think Dogecoin is going to move to the upside in the coming weeks? Let me know in the comments section below.